us, but then to answer all the queries live and do our viewers financial planning today, I have with me Hemant Rustagi from Wiseinvest. Hemant, good evening and welcome to the show. And let's speak to Ramki, our viewer from Delhi. Ramki, good evening, sir. How are you doing today? Mr. Ramki, can you hear me? Okay, I think we'll get him back on the phone line, but then Hemant, we do have his question on us. He says that he's currently, he has a corpus of, Mr. Ramki, can you hear me?
Yes, I can hear you.
Thank you so much for sending us your question. You have a corpus of 4 CR already, sir?
Yes, that's including...
Sure. Sure. All right, you will additionally receive 65 lakh in July 2026. So you need an average cash flow of 3 lakh rupees 2 years from now. Is that right?
Starting 2 years from now, yes.
Okay, so you want to have a portfolio, where you can have a regular cash flow on this account, and you are also planning to monetize your real estate properties. And what should be an approximate amount that you might be getting from there?
Yeah, I can get 10 crores from there, but I am not we can, if the current corpus which I have told you, that is 4 crores now, and
sure.
Then if I draw on July 26, is adequate.
Okay.
Another 3 lakhs per month starting 2 years.
Got it. All right, interesting question. I think there's some network issues, so I'm not able to hear you properly, but then I've got the question, and even Hemant heard you, and he also has the query. So 4 lakh of investment right now, he'll be getting additional 65 lakhs, but that'll be later on in 2026, and he'll be also liquidating his real estate. But then having said that, a good time for him to strategize his portfolio so that he can get an average monthly cash flow of 3 lakhs after 2 years from now, Hemant.
Yes, Kavita. I think, look, what has happened is that his current portfolio is around 4 crore, out of which I believe that 2 crore is invested in the stocks and the remaining is in mutual funds. Plus, he's going to get around 65 lakhs after 2 years, and he wants to start SWP or generating regular income also after 2 years. See, one of the ways you can generate regular income, especially if you're invested in the mutual fund, is through a systematic withdrawal plan. So what typically happens is that you build a corpus, right? And then once you build the corpus, then you direct the mutual funds to draw a certain amount of money every month and give it to you as a regular income. So what happens is that despite the fact that you are invested in a market-linked product, you are assured of getting a certain sum which can be used as a regular income. Plus, there are other benefits like, the returns are tax efficient. So SWP can be the right solution for him. Now, the important thing is that when you are drawing money through SWP, you need to be very careful in terms of how much are you withdrawing from there. So reasonably, I think 6% or 5 to 6% is what you should be looking at drawing out of your portfolio. So in his case, if the requirement is 3 lakhs per month, he will require 36 lakh. So which means that if I have to look at 6%, he needs a portfolio value to be around 6 crore after 2 years. Now in this case, even if I assume that the current portfolio is in equity funds and also the stocks, which obviously if you have a good stock portfolio, it has the potential to give you higher return than what mutual funds can give you, but of course with the attendant risk, he will not be able to reach his target. But good thing is that he will get 65 lakhs after 2 years. So he can kind of include that in the portfolio. So maybe if there is some flexibility in terms of drawing maybe around 2 lakhs for a year or so, and then increase it to 3 lakh, I think that will be the ideal thing. Also, it can be a bit tricky to set up SWP for the stocks. It should ideally be done from the mutual fund portfolio. And since he has a portfolio of 2 crore in the fund, and the 65 lakh that he gets after 2 years also can be invested in maybe equity hybrid funds. From where he can start doing SWP. So maybe he should begin with 2 lakh, increase it to 3 lakh maybe after a year or maybe 18 months, and ensure that he's not drawing more than 6% because then the growth will get compromised.
All right. So, Mr. Ramki, is there anything else you want to ask Hemant?
Yeah, that's good. then thank you very much for that.
Sure. All the best. All the best. Let's move on to our next viewer, which is Mr. Sushil Das from New Delhi. All right. A lot of New Delhi questions coming in today. Mr. Das, good evening. Welcome to the Money Show. Thank you so much for sending us your question.
Good evening, ma'am. Thank you for
Hi.
taking me on.
Sure. Sure. Okay. So, yeah, your question is on rating AMCs. Is that right?
That's right. There was a mention in your, I think, yesterday's show, if I'm not mistaken, where the Fin advisor had made a term of reputed AMC. So I just want to know if there's anything like that or a rating agency which sort of assesses these AMCs, and if so, how does one decipher these ratings?
Sure. Very interesting question. In fact, thank you so much for asking this question. You know, through you, we can really educate a lot of viewers on this aspect. So, Hemant, so all these AMCs are regulated by SEBI. We are aware of that. But then schemes are given ratings from different rating agencies, and you know, normally that you figure out on any other website is usually a CRISIL rating. But then are AMCs also rated, and if they are, what would be the parameters? And if we are talking about schemes over here, what are the parameters? You know, on the basis they get 5 stars or 4 stars rating. Hemant.
Well, Kavita, as of now, the AMCs are not getting rated. Obviously, we need to understand that the role of AMC is to manage your money. Okay, though they mobilize money from investors across the country, and then based on the investment objective of the fund that they float, the money is invested. So while the AMCs are not rated, the funds are. And there are certain entities like Value Research, Morningstar, CRISIL, okay, Money Control. These are the entities you will find that they actually rate certain funds based on certain parameters, which is obviously the composition of the portfolio, maybe sometimes even the AUM, and also I think the majorly they look at risk-adjusted return. So the funds are rated, so you will find that the funds are rated from maybe 1 star to 5 star. But I think it's important for every investor to understand that while rating will definitely help you analyze a particular fund, but there's no guarantee of the future performance, one. And it is not that you can just ignore every other aspect and just go for 5-star funds, because you need to also look at, like I said, there are various categories. Even within, for example, equity, if you look at, there are different categories of fund. You need to look at suitability. First, you need to decide what category of fund you should be investing in based on your time horizon and risk profile. And within that, one of the parameters, of course, can be rating, but that can't be the sole criteria for investing in a particular fund.
Sure. Mr. Das, I hope that answers your query. Is there anything else you want to understand?
Thank you, ma'am. That answered my query, and I keep watching your show, so if there's something else, I will get back to you. Thanks so much.
Thank you so much for watching. Thank you. Let's move on. I have Mr. N. Ramesh from Hyderabad on the phone line with me. Good evening, sir. How are you doing today?
Good evening. Thank you. Fine.
All right. You want to invest in a Nifty 100 ETF through SIP, and you want to build a corpus for your 7-year-old grandson, and for that purpose you are looking for a fund. Is that right? Any specific reason why you have picked up a Nifty 100 ETF, sir?
Actually, I wanted to pick up SBI Nifty 50 ET.
Sure. Okay. All right. So we'll get that question answered. But is there any specific reason why an ETF?
I thought it is more convenient and more stable.
Okay. Okay. And I mean, this is for your 7-year-old grandson. So it is just a wealth creation goal that you're also looking for. Are you comfortable going beyond ETFs?
No, because basically I have direct exposure to number of shares, blue chips.
Oh, you do already.
So I thought this is a by way of diversification. I wanted to have exposure to Nifty 50 ETF and also Nasdaq 100 ETF.
All right. Sure. Hemant, what will be your recommendation as far as ETF choices are concerned?
Well, Kavita, since we're talking about ETF, these are passive funds rather. So if he was very keen that he wants to look at the entire universe of large cap, then obviously Nifty 100 ETF within the passive managed funds is a good option. you will see that the composition of the portfolio is going to be exactly same, because what an index fund does is that invest in all the 100 stocks, and the weightage of the stock is equals to the weightage that is given to the stock in the index. So you won't find much of a difference. The only difference can be in terms of tracking errors. In some cases, you'll find the tracking error to be slightly higher than others. But a couple of funds which I think he can consider, you can consider one of these, HDFC Nifty 100 ETF or ICICI Nifty 100 ETF. One of these he can look at. But my view is, even though he has a portfolio of the stocks already, since you're investing for the longer duration, maybe around 15 years or even more, having some exposure to other segments of the market like large and mid also can actually give you an opportunity to kind of enhance your overall return over a longer period. So maybe investing in multi-cap fund can be also a good idea.
All right. Mr. Ramesh, are you there on the phone line with me, sir? Anything else you want to ask Hemant? He's recommending HDFC Nifty 100 ETF and ICICI Pro Nifty 100 ETF for you.
Okay, madam. Thank you.
All the best. Alright, we have more viewer queries coming up, but then it's time for a quick break. I have Hemant with me connected, and just in case you're watching the show live, you can also send across your question on our WhatsApp number, and you can email us your Welcome back. You're watching The Money Show, and we are answering your mutual fund portfolio queries. With me is Hemant Rustagi. And Hemant, let's move on and let's take Sagarika's question. Sagarika Sahu from Odisha has emailed her query, and she says that she's been investing 5,500 monthly, and the funds that she has in a portfolio are UTI Nifty 50 Index. She has ICICI Pru Blue Chip, Parag Parikh Flexi Cap, Nippon India Small Cap, and the financial goal is to accumulate 3 CR over 15 years, and she wants to know if there is any improvement needed in her portfolio, any changes that you might want to recommend.
So Kavita, let's look at the target. The target is 3 crore after 15 years. So even if I assume annualized return of 12%, she needs to invest around 60,000 rupees per month to get there. Her current investment is 5,500, so there's a huge gap between what she's investing right now and what she needs to invest. So clearly there is a need for her to relook at the target, or maybe increase or expand the time horizon there. So that's the first part. Second part, if you look at the portfolio, although I would say that the fund that she has selected are good, but I see a significant portion of the portfolio being invested in the large cap. While large cap have to be an integral part of the portfolio, it's very important to also make sure that there is a healthy exposure to mid cap and small cap. There is one small cap fund in the portfolio, but what I see is the mid cap segment is completely missing from the portfolio. So my recommendation would be that instead of ICICI Blue Chip, where she is investing 1,500, she can consider investing that money in a mid cap fund, which would be Motilal Oswal mid cap fund. So one change, so that there is exposure to mid cap, and then, as I mentioned, that she needs to increase her SIP as soon as possible. If she can't do that, then maybe she will have to extend her timelines.
Okay, so that's the solution for Sagarika. So a lot of queries, Hemant, we keep getting where people are sending us their fund selection, they know about the time horizon, they know about their goals also. But one common thing that I'm looking at in as far as the fund selections are concerned is a small cap and a flexi cap. Do you think it's time for investors to move on beyond these categories? Obviously, when it is a well-diversified approach, you should be thinking about different market caps. It's important to go beyond these categories also because you're investing through a mutual fund portfolio. But ideally, what does the thumb rule say about, being well diversified or having equal weightage in your large and mid and small cap? How can one decide that?
I think it's a great question, very interesting question. I think it's very important for every investor to kind of look at this aspect. See, Kavita, what happens is that when you start investing in equity funds, you need to be familiar with equity as an asset class. You need to understand the nuances, what are the pros and cons of investing in equity. Obviously, when you start investing, there are certain fears in your mind, you have certain apprehension. And so you need to make sure that when you're starting investing in equity fund, you are not making your portfolio very aggressive, because equity by itself is an aggressive asset class. So maybe it's a great idea to start with the flexi cap fund. Now, flexi cap fund by definition means that the fund manager has the flexibility of investing across market cap. But if you analyze the portfolio of most of the flexi cap funds today, you'll find that there is a bias towards the large cap. So a significant portion of the portfolio is invested in the large cap, which I think works very well for investors, someone who is trying to become familiar with equity, because you don't want the extreme volatility in your portfolio, because that will scare you. So once you become familiar, once you have built some kind of portfolio, maybe then you can start looking at other categories like multi-cap or large and mid-cap. Or if you become confident that you're very sure in terms of how much allocation you should be doing for different market caps, then you can look at a large cap, mid-cap and small cap separately. But then my view always is that you need to be very careful there, because as and when you need to rebalance your portfolio in terms of allocation to different market segments, okay, it may require some amount of tax. You need to pay as a capital gain. The timing becomes an issue. When you go into multi-cap or a large and mid-cap or even a flexi cap, the fund manager has the flexibility. One, in certain cases, they have to maintain minimum allocation to certain market segments. Then there is a flexibility, so which means that you don't have to do anything yourself. The fund manager does it on your behalf. So you don't have to worry about timing. You don't have to worry about tax aspect of it. So I think as you kind of become more experienced, as you see that your portfolio has grown, and considering the fact that you become more experienced, that's the time you should start looking at this. But I think for any long-term investor, it's absolutely necessary that you have exposure to all three market segments. As a thumb rule, as you mentioned, my view is that someone who is not managing portfolio very, very actively, maybe at least around 50% can be in large cap, and out of the remaining 30-35% can go into mid cap, and the remaining 10 to 15% can go into a small cap. That's a broad allocation, but like I mentioned, if you kind of invest in these categories, the fund manager does rebalancing on your behalf as and when required.
All right, let's move on to our other email question, which is from Naif. And Naif says that he wants to start investing in mutual funds. He is planning to invest 20,000 per month, 5,000 in 4 months, 4 funds each, and planning to invest for 5 years. What should be his expected payout in terms of return and profit from the portfolio? Hemant.
I think the key factor here is time horizon of 5 years. The average holding period, because the money is going to be invested through SIP, is going to be around 2.5 years. So obviously he should not be making his portfolio very aggressive. He can maybe look at 4 funds, 3 funds from hybrid category, which is equity hybrid, and 1 fund in the flexi cap category, which can be Nippon India flexi cap, and the remaining 3 funds can be ICICI Pru equity and debt, Kotak equity hybrid fund, and HDFC balance advantage. The reason why I'm putting more emphasis on investing in the hybrid fund is, like I mentioned, the average holding period is just going to be around 2.5 years.
All right, let's move on to our last question for this show. Okay, no, we do have more queries lined up. Let's take Vijay's question. Hemant, he says that he's 50 years old, working in private sector with no pension apart from PF, 47 lakhs out there. NPS 5 lakh, term insurance he has is of 1 CR, and health insurance coverage is 15 lakh. And he has 5 lakh invested in mutual funds for long term. HDFC multi-cap, Kotak multi-cap, ICICI Pru focused equity, Nippon India large cap. And considering the state of the market right now and his age, he doesn't have any separate investments in small and mid caps. He needs 3 CR in 10 years to pay off his home loan and for his retirement. For his short-term needs, child education, higher education, he's invested in ICICI multi-asset fund, needs 15 lakh in next 3 years for this purpose as well. So he wants you to review his portfolio and also suggest any kind of changes looking at his financial goals coming up quick ahead.
So I think if you look at the target that he has of 3 crore, the time horizon is around 10 years. So I think first of all I would like to say that he has done well in terms of risk management, that he has a health insurance, he also has a term plan. If I look at the investment which is made currently right now in the Provident Fund, and then also in the NPS, and then there is some accumulated amount in the mutual fund portfolio, I consider these 3, he can expect to build a corpus of around 1.5 crore from these 3 after 10 years. Now his overall target is 3 crore. Now there is another 1.5 crore for which he needs to plan. He can do that basically by investing through SIP in equity fund, but he needs to invest around 60,000 rupees per month, right? So there are 4 funds. I really don't know how much is being invested in each of these, but like I said, 60,000 is something that he needs to invest to get there. There are 2 multi-cap funds. There is one focus fund and there is one large cap fund. I think the portfolio composition is right. He also mentioned about the fact that he does not have any exposure to mid and small cap funds. But the fact is that because he's invested in 2 multi-cap funds, and these multi-cap funds have to compulsorily invest 25% in each of the market segments. So there is exposure to mid and small, which I think is fine considering the time horizon is 10 years. So I think the current portfolio is fine. He can continue with this, but there is certainly a gap in what he is investing right now and what he needs to invest to get there. So I think he needs to look at this aspect if he wants to achieve his target of 3 crore.
Perfect. I don't have him on the phone line, otherwise I'm sure he could have, extended the discussion and he might have more questions as well. So clearly, SIP amount needs to be increased and the existing portfolio looks fine. But then let's move on to Vinod Mehta's question from Hyderabad, Hemant, and he's invested in a few funds since November 2023. Okay, a lot of them, I will not call out the names, I think I'll be done with my time. So he wants to know if his current portfolio is structured really well or you recommend any changes. Additional investment for 3 years needs to be done according to him, and short-term goal is 6 years, medium goal is 10 years, and the long-term goal from this portfolio that he wants to accomplish is after 16 years. Hemant.
Well, I think there are a couple of important aspects, Kavita, we need to look at when we analyze this portfolio. I think the current accumulated corpus is around 20 lakhs. There are 14 funds in the portfolio. The time horizon for 3 different goals is 6 years, 10 years and 16 years. And out of these 14 funds, there are 6 sector and thematic funds. So obviously, I feel that the portfolio is very aggressive. We need to kind of relook at the portfolio and try to realign that again. To begin with, there is a flexi cap fund. There are 2 flexi cap funds: Paramparika flexi cap, ICICI flexi cap, and multi-asset fund, ICICI multi-asset fund, which I think is ideal for a goal where the time horizon is 6 years. So I think as far as that first goal is concerned, these 3 funds are perfectly fine. As I mentioned, there are 6 sector thematic funds. So I think there is a need to kind of relook at that aspect. So my belief is that out of the existing fund, you can look at SBI Contra. And couple of other funds that needs to be added in the portfolio. One is multi-cap fund, which is Kotak multi-cap. Then HDFC large and mid-cap in the large and mid-cap category. And there is a mid-cap fund you can look at as Motilal Oswal mid-cap fund. So these 4 funds, I think for the remaining investment should be fine. 1 existing fund, 3 new fund. I just mentioned 1 fund in the category. You can look at any other fund in those categories. But you need to make sure that the portfolio is well diversified rather than focusing so much on sector and thematic funds.
Alright, on that note, it's time up on the show today. Thank you so much, Hemant, for taking time out and answering our viewer queries live with us. And for all those viewers who have not been able to send across your questions, you can still do that because we have our WhatsApp number where you can send across your question, your detailed question.